If you're curious about the stock market and the biggest brands, you've clicked on the right video. PepsiCo stock is down 20% from recent highs, but it's trading in deep value, high yield territory, and we're here to break it down. Let's get started. Welcome back, everyone. Today we are discussing PepsiCo. Over the past few months, the stock has seen some significant moves. It's down approximately 20% since May, and that's something we simply can't ignore here. But before the investors hit the panic button, let's talk about what this decline really means. So we're not hitting the panic button here, but if someone does want a button to hit, you can text MarketBeat to 68285 and you will get free stock market alerts right on your phone. Back to the important discussion here though, a 20% drop. That does sound a little alarming. So what are we looking at here, Thomas, and what factors are causing this?
Yeah, right. So 20% is a pretty big decline. I'm sure lots of investors are scared, but I think investors looking to get out before it's too late or too late. The stock is corrected, and now there's a bigger picture, a bigger story at play. The correction took the market down to a major uptrend line. We're seeing some solid support at that uptrend line. I think we're seeing a pretty nice trend following signal that should lead this stock higher over time. And ultimately, this correction was caused by sentiment. It was fear of slowing growth and underperformance due to consumers shifting down, and the Q3 results totally blew that idea out of the water.
Chris, Thomas say that investors might want to stay in this market. Why is it an appealing consideration exactly?
So Pepsi's really at a place that most investors should really be very optimistic. Yes, the stock is still down 10% for the year, and that's, concerning, but you have to put that into context of what Thomas just said. They delivered earnings. Earnings are up about 10%. The dividend's also up about 10%. And that should give investors the confidence to say that the pullback was really just the market doing what the market does. And Pepsi was dragged down along with the general market, but there's really nothing fundamentally wrong with the business. And that's something that you're looking for with a defensive stock, is a company that's going to deliver stronger revenue and strong earnings over time.
All right. So Thomas, if you would tell me more about the dividend situation here. How does Pepsi's dividend compare to other investment options, and why is this important for income investors specifically?
All right. So Pepsi's dividend isn't some ridiculously high yield, but this correction has shaved about 5 handles off the value and put the dividend above 3%, which makes Pepsi a deep value and a high yield relative to itself. Now, that by itself also isn't really a great reason to buy, but PepsiCo is a market leader, an industry leader. It's growing. It's got a healthy balance sheet. It's got the solid dividend support of the analysts and the institutions. So I think that this pullback really is just another, like Chris said, a natural market function, and the uptrend will resume.
Can one of you explain a little bit more to me about how we can maybe differentiate a market correction and a bear market? Chris, do you maybe want to explain that?
Yeah. So the textbook definition has to do with percentage and the scope, I guess I'd say. Market corrections are generally seen as when an asset or an equity drops 10% in price. And it becomes a bear market when it drops about 20% in price. So like Thomas was saying at the beginning, Pepsi's down about 20% from its peak, but once it dropped 20%, the stock went back up. So it didn't really ever get into that bear market territory. Bear markets are less common, but they're obviously more scary for investors. And they also tend to be a little bit more short-lived. Market corrections, on the other hand, those are relatively frequent. And we're seeing in 2023, it's kind of like whack-a-mole. They're just happening all the time. I mean, one stock goes down, another stock goes up, one sector goes down, another one's going up. And I think, again, investors were looking for reasons to kind of take profits off the table, rebalance their portfolios. And a stock like Pepsi is kind of easy to do that with, because you kind of have the expectation that earnings are going to go up, and then eventually the stock price is going to go back up.
Let's touch on their Q3 results here a little bit. PepsiCo reported a solid quarter. So what are the highlights here, Thomas?
Well, so like the revenue was only as expected, which is really the worst that can be said because that means high single digits. That was offset by margin strength. The company's growing in all segments, widening margins, produce better than expected bottom line results, and it also guided favorably for next year. They're looking for growth to be at the high end of their target range, which is above the current consensus. That should lead sentiment and the market higher.
Did anything specific catch your attention here, Chris?
Not really. Like Thomas said, they reported about what I think it was 6% year-over-year revenue growth. And that's the kind of performance you expect from a blue chip defensive stock like Pepsi. They make products and that consumers are going to need all the time. So, regardless of what's happening in the economy, they may be considered boring compared to like AI stocks, but in times like these, we talk about Pepsi a lot on this channel. We talk about stocks like Pepsi. At times like this, that's why we talk about it, because sometimes you don't really have to go hunting for growth. It's hiding right there in plain sight. And this is one of those examples.
For sure. All right, Thomas, if you would talk to us a little bit about PepsiCo's guidance for the future. How does this impact the company's outlook?
Yeah, so Pepsi targets a 5 to 6% long-term revenue growth range, and right now they're looking for growth to be at the high end of that range. I think that they could possibly exceed that range given their brand strength and their lean into international markets. International markets and emerging markets are supposed to outperform next year, so I see that as Pepsi as a pretty solid play on that. At the same time, margins are also expected to expand. Earnings growth will almost double revenue growth. I see this leading the market higher, or at least helping the market sustain its current price levels.
All right, and let's leave our viewers with this. What do investors need to keep their eye on in the coming months regarding PepsiCo stock?
Right. So I think that PepsiCo could raise their guidance again. They might not do it before the next quarterly report, but they might provide some pretty solid guidance for next year when they report Q4 results. So I'll be looking for that in the next report.
Anything you want to add to that, Chris?
Not really. Again, I think Pepsi's going to do what they do, and that they remind me of just one of those stocks. They just do what they do. As I agree with Thomas, I wouldn't be surprised at all if they come in the first part of next year and start raising that guidance a little bit more.
Perfect. Well, thank you so much for joining me on this latest PepsiCo update, Chris and Thomas. We appreciate you digging into the details so that we can report on this for our viewers. I have went ahead and linked several resources down below if anyone's looking for more analysis, but we will be right back here with more insights on this stock and more. So be sure to hit that subscribe button. And if you're looking for something specific, go ahead and leave us a comment. We'd love to hear from you so we can kind of tailor this content to what you're actually looking for. Thanks again, guys. We'll talk soon.